According to a poll from Ipsos, almost all Americans have already set or are considering financial resolutions for their 2026 list. Here for this week's FA Corner, brought to you by Capital Group, is Dale Smothers. He's RDS Wealth Management CEO and President. Dale, great to have you. Let's start big picture here, because in 2025, we face geopolitical uncertainty. We face AI bubble risk concern towards the end of the year. Now in 2026, you say none of that is going away. So how should investors be thinking about their portfolio positioning in these final days of trading?
Yeah, good to be with you, Brooke. Realistically, I think this boils down to one word going into 2026. If you have a financial, or let's say an investor's New Year's resolution, it would be to maintain discipline. That's the word, discipline, going into 2026. All of these things that you mentioned will continue. We'll see headlines push the markets up, push the markets down, and I like to think of those as overreactions more times than not. And the reality is, if you have a disciplined mindset, an approach to your investments based off of a plan rather than overreactions or reactions in general, this is going to bode well for you going into the new year.
Dale, I think it's worth noting that RDS Health Management does really focus in on retirees. Volatility, though, really is the name of the game over the past 2025 for those who are thinking about retiring soon, and really at any age. How do you sort of withstand that volatility? How do you maintain that discipline in this very, here and there market?
You're exactly right. The reality is, at RD Smothers Wealth Management, we focus specifically on retirees that are entering into what we call income phase. You transition from growth phase into income phase, and there has to be a mindset shift. You can no longer chase the returns. It's more about stability. We like to say income first, growth second, protection always. And when investors invest this way, this financial market news that we hear every single day, it becomes background noise that we can tune out. RD Smothers Wealth Management, we like to think of ourselves as maybe some noise cancellation earphones, right? So we can cancel all that noise out. And the way we do that is by subscribing to this rule first, that losses will hurt us more than gains will help us. Building this type of portfolio on a risk-on, risk-off portfolio basis, where we've got some money that's stable for income purposes alone. We can pull from that even in down market years. Having some money that's out there clearly chasing these optimistic returns that we're seeing in the markets of 2025 and even 2024. This balance between risk on and risk off is how we approach years like 2026.
Dale, when you think about how exactly investors should be setting time horizons for this market, where they're willing to take some risks, they're willing, to pull back a little bit, at any age, whether you're about to face retirement or you're just getting into this market now, how should you be thinking about the time horizon that works for you as an individual investor?
People are sitting on retirement accounts and just investment accounts in general that are larger than they've seen in decades, Brooke. This is probably a high of most investors' retirement accounts because we've seen significant run-ups. If you participated at all in the markets, this is a perfect opportunity to revisit your portfolio and make sure that it is still built for the lifestyle you have today, not the lifestyle you had 5 years ago or the lifestyle you maybe even had just 5 months ago. Times change, desires change, needs change, and that time horizon should be front and center. As you mentioned, reevaluating where your time horizon is compared to the amount of risk that you have in your portfolio is certainly going to help you withstand these overreactions in the market that are sure to come from all of the headlines.
Dale, real quickly here, one big beautiful bill is set to see or lead to larger tax returns next year. How should investors be thinking about that ahead of next year when they go to do their tax filings?
So again, at RDS Wealth, we build retirees portfolio that is really addressing all 5 worlds of retirement. Tax planning is one of them. The big, beautiful bill needs to be front and center with your advisor inside of your plan, reevaluating the tax benefits that you may receive, maybe even some additional taxes that you may find in the small print that you may end up paying. This type of tax planning needs to happen every single year, and a piece of legislation like like the big, beautiful bill is a perfect opportunity to reevaluate your overall tax plan. We like to think of this as an opportunity with smaller, hopefully smaller tax bills for Social Security recipients, for those over the age of 65. This is a great opportunity to look at Roth conversions as a potential if you have some extra room in your tax bracket, something we call opportunity zones that appear in the tax brackets for retirees.
Dale Smothers, so many great tips. Thank you so much for joining us, and Happy New Year to you.
Happy New Year, bro.